Hello, this is Team Loan Comes to X. Hope you're doing well today and you get some good trades. Typically, it's been known in the Forex market that certain currency pairs move together, especially those currencies that have the dollar on one side of the pair or the other. So typically, we have found that the euro dollar and the pound dollar move in similar direction. As one moves up, the other one moves up. Yet, as of late, we've seen a disconnect between the euro dollar and the pound dollar, one going one direction while the other goes the other direction. And usually we only see this disconnect at the end of a month when we see swaps between the BOE and the ECB. So what are some of the reasons why we've seen this disconnect as of late, and how has it affected the euro pound? Because the euro pound really sees some movement when we get this disconnect. And the euro pound is approaching an area to where if it breaks a certain monthly area, we could see the potential for the euro pound to push on down back towards 179 and 178 area. So let's take a look. Well, over the last few days, we've had some good reports out of the BOE. Growth forecasts go from 2.8% up to 3.4% this coming year, and that suggests a potential rate hike come March of 2014. Now, the interesting thing was that actually one of the Monetary Policy Committee members, Bean, had come out and said that we should do a rate hike before there's a slack in the economy that would probably tell us not to make a rate hike. So with that, we've seen the pound make a good move to the upside. As a matter of fact, today, it did not quite reach its 100 pip average daily range for the last 5 days. It did push up here to about 78 pips or so, and I still believe that it's going to push through the 66.75 third extension high target of the week before the week is out. It literally could push up here and take out 167 before the week is out. Now, my thinking is if it doesn't, but it closes up in this area, we've moved to a new range and we push higher. Now, on the flip side, we've seen that the sentiment is showing potential divergence, but price isn't ready yet. So just be careful that when you see higher highs in price, more or less, and you see lower highs, we're looking for that potential divergence, but it doesn't necessarily mean it's going to happen now. You literally have to wait for price. So right now, institutions have actually upgraded their targets above 66.70. I read today to where some of the larger institutions in the marketplace have pushed their targets above the 66.70 to 66.75 area. Well, where are they shooting for? Well, that is out on the monthly chart. I've drawn it here at 77.45. It's a high that we had back in April 2011. And if the market breaks that, we have a new bullish long-term outlook on the pound that could see us push on up to the 170 or higher sometime later in the year. Now, with all this being said, let's go take a look at the euro dollar, because the euro dollar hasn't made as much movement. But at the same time, some of the fundamentals out of the eurozone haven't been as well received or have been less than expected. As a matter of fact, we've seen some comments of possible future negative deposit rates with some of the banks being talked about with some of the ECB members. Draghi's also made some dovish comments that suggest that maybe the euro dollar is at too high of an exchange rate. Well, that caused some movement down. Now again, remember, if the pound's going up but the euro's coming down, we're going to have a disconnect and the euro pound's going to make some movement. And we're going to look to see which one's stronger. Well, obviously, by the amount of movement we've seen, almost 3-to-1 of the pound movement over the euro, we've seen the euro pound make some pretty good movement. Now let's see what took place today. Today, we saw a pretty strong move up in the euro on some additional comments that came out. But more than anything else, there wasn't any real big thing that caused the market to rally, except for what was perceived to be an institutional squeeze on the market. According to certain reports in the marketplace, there are more shorts than there are longs in the marketplace, and for some institutional traders, it's much easier to go stop hunt some shorts in the marketplace. So we get this short squeeze to the upside. However, it didn't make it to a level that I thought it would. Now, we may not be done yet with this euro. We could see in the upcoming Asian session and overnight we have some GDP reports out of Germany and out of France and out of Italy, if these prove to be better than expected, I think the market pushes on up and hits the 137 to 137.50 offers that are sitting up there by large institutions. They hit those, then the market takes the move down. Now, if the reports overnight come out worse than expected, we may not actually get up there. The market may try to grind up there, but eventually we're going to see the drop down. It depends on the size of the offers up above. So today, compared to yesterday, we've seen the euro move up along with the pound making a move to the upside. So that has seen the euro pound today make a little bit of a move back up. Again, when the euro moves and the pound moves in the same direction, we look for the euro pound to slightly move along but not have much movement. But look what took place yesterday on the euro pound, and that was why I'm doing this video. I've had some folks ask me, why did the euro pound make such a big move? Well, that's the disconnect between the euro and the pound. Obviously, with the pound making that big move yesterday and the euro sitting kind of flat and dropping down a little bit, and it didn't drop down much. It dropped down about 60, 70 points though, but not anywhere near that gargantuan move that we had yesterday of about 200 pips in the pound. You can see again a pretty sizable difference between the two, and that saw the euro pound slip down. Now the interesting thing is that as of this week, we've moved from the weekly open, went up to about the weekly mid-high, and yesterday we saw it drop down to the weekly mid-low, then push down to the first extension low, and today seeing it come all the way down to the second extension low. Now this is getting really close to a specific level, and that level is about 81.50. If we go and take a look at the monthly chart, I want to show you something that's been going on with the euro pound for quite some time. Back in 2007, 2008, we had a pretty good move to the upside. Since that time, we've been in this downward channel or a bearish channel, and notice that what's going on right now, we're bounced off for the last few months. We bounced off the top of the channel and we're moving back down. We're about to move right through the middle of the channel here. Well, where's that residing at? That's residing somewhere in the neighborhood between 80.50 and 81.50. If I zoom in and take a look at the weekly chart, take a look at this. From this low to this high, you can see that we've made a move down to about the 618 level and kind of bouncing here. A break of this level, which is pretty close to 81.50, we're going to see the slide potentially down to the 79.80 area and then possibly on down, like I said, in the 78 area. We could see it as low as this possible 78.70 area. That's the possibility, and that's only getting through the halfway point in this bearish channel that we saw on the monthly chart. Now down here pretty low, we get down to the 77.50 area, and this puts us all the way down. If we break that level, notice where the channel takes us to. It takes us right to that 127.2 level that would see us about that 74.65 area. Now I'm not saying we're going to get there anytime soon. This is a monthly chart, of course, but we're getting into that contentious area. If the pound goes up and pushes up above 67.45 and the euro meanders its way on down towards about 34.75, 34.50 area and kind of meanders between that and 135, that's going to give encouragement for the euro pound to continue to push down. Now, if the euro really gets going down towards bigger targets like 134, 133, that's obviously going to bring the euro pound down. I really don't think that the ECB wants to see the euro dollar down around 133, but it wouldn't surprise me that we make a move down that way given the overall range of the euro being in about a 350 pip range. We're getting to the top of that range, 137 area, 350 pips down. Well, that puts us in that 33.50, 134 area. So, long story short, as we go into Friday, here's a couple things to be looking for. Look for the euro pound to make a slide down in the event the pound goes up and the euro does nothing. Now, if the euro goes up to those 137, 137.50 area and the pound goes up, we'll see this gradual climb up and maybe some flattening out. On the flip side, If the pound sits right where it's at and finishes off the week on a high, and we see the euro go up and then crash, hitting those 137 offers and then the big sell-off, then look for the euro pound to slide down and possibly end out the week right around 81.50. Well, this is Dean Malone with Compass FX. Hope some of the information I've shared with you will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.